Assalamu alaikum, everyone. My name is Faisal. I work in the digital public infrastructure space, and we are trying to digitize the economy of Pakistan. We are working with the government and a lot of other players, the central bank, and that's how we are doing it. So today I've got some very interesting guests. Let me invite Carol Coye Benson first. To tell you about Carol, Carol has had a over 40-year long career in the banking sector. She's worked with the operations, the lending side, the payments, the digital payments. She has been associated with Deutsche Bank, with Visa, with Citibank, and then about 20 years ago, or a little over that, she started a consultancy by the name of Glenbrook Partners. Now she has retired, and I wanted to thank Carol that she has come out of retirement just to support Pakistan, and she has chosen Pakistan to support for the development of digital economy over here. There's one very interesting fact. So everything that you do is built on certain rules. Raast is built on level 1 principles. About 15 years ago, the Gates Foundation gathered some of the global experts of the payments and then developed the level 1 principles based on which the instant payments is now working on in the world. Carol Coye Benson is one of the 4 or 5 architects that made the level 1 principles. So based on her principles, we are now developing all these instant payments, not only in Pakistan, but around the globe as well. Next, I would like to invite Hina Hameed from State Bank of Pakistan. I won't be wrong if I say she's the technical architect of what Raast is today. So she's the one who helped us design the entire infrastructure over there. She knows how the banks have to connect, what are the issues with the banks on the technology front. So we just thought we'll invite Hina and hear directly from her everything about what Raast is, how it happened and everything. Next, I would like to invite your own famous Ammar Habib Khan. You might not know about Ammar, but he wears a lot of hats. He has been the Chief Risk Officer at Karandaaz. He is the CEO of the National Credit Guarantee Company Limited. He has been working in the risk side with the banking sector and a lot of other entities. So, and there's also I don't know, should I say it? There's also a Twitter handle very famously known by the rogue economist, that's Ammar Habib Khan. And finally, it's Sharjeel Murtaza. Sharjeel is the Chief Digital Officer at Karandaaz. Some of the key projects he has been working on is the automation and digitization of the Securities and Exchange Commission of Pakistan, the STR, the LEAP program, and other things. And now he is helping develop the cashless economy along with the government of Pakistan and with the financial sector. Thank you very much. We'll start our discussions with Carol. I know you live by the payment systems, you understand it, and you are one of the, let's say, one of the top people who understand how payments work. I just want to understand from you, what is the importance of payment systems in the development of an economy, a cashless economy? How important are they?
Before I get to that very interesting question, I just would like to say that I really love Pakistan. This is my third visit here, and I'm enjoying learning more about the country every time I come. But I love the people. I love how young the country is. I love the technology. I love the fact that there are so many women involved in the development of the economy, and it's just a great place. And so it's wonderful to see, and I have really enjoyed watching. I've had some small role in the design of Raast, and I want you all to know that Raast is a world-class payment system. And you should be, really, really proud of the fact that Pakistan has this payment system. Now, that being said, what was your question again?
Right. So the question was, what is the role of a payment system in the development of a cashless economy?
Well, I never answer a question directly. Let's take a step back and say, what is the role of a payment system in an economy? So basically, payment systems are how an economy works, right? That's how you get paid, right? And it's a very, very basic way. And so I've been telling people over the course of this week that when you looked at the growth of the American economy, interestingly, it was the checking system, this very old-fashioned payment system, that in the 20th century, our central bank operated the checking system. And economists will tell you that it was that payment system that spread across the whole country and enabled the growth of the American industrial economy in the 20th century. The fact that it became easy for companies across the United States to buy and sell from each other, because before that system was in place, it was sort of a mess. Each state had their own checking system and it didn't work very well. And our central bank, put in place the system that made it work smoothly, and that enabled what turned out to be sort of a powerhouse economy growing in the 20th century. Now, of course, our central bank has dismantled that system because it's no longer relevant. And now we have electronic payment systems. But, it is, very interesting how central payment systems are to economies. And, that's a business to business example, but it's also true in retail environments. So payments are important for the ease of payments for both businesses and consumers, tremendously important. But they also are very important because they enable the extension of credit, again, for both consumers. In some examples, the credit card industry did that in many markets. What we're seeing in both developed and developing economies is that electronic payments allow merchants, both very small merchants and larger merchants, to develop credit history, transaction histories that allow them to borrow money, often very small amounts of money, so that they can restock their shelves more quickly and therefore sell more. This is, we're seeing this around the world in very, very poor countries, very developing markets, and also very large companies rely on data generated from electronic payment systems to support, an increasing variety of credit mechanisms. So ease of use and supporting credit mechanisms are two important things. And then, of course, as businesses in particular, consumers to a lesser degree, are buying and selling across borders, electronic payments are a key piece of enabling that transaction flow.
Excellent. So, yes, I've heard about the checking system and how it was developed as a public good and how it helped the manufacturing industry in the, I think, mid 60s, 70s in US, and how
even before that, I would say in the 30s and 40s. I mean, it was
Right.
yeah.
And that strength of the manufacturers actually helped US become one of the superpowers in those days. Uh, Speaking of economy, cashless ecosystem, Ammar, you know better on economy than most of us around here. So when we try to digitize the economy, when we try to go cashless, what are the challenges that one normally faces, and in particular to Pakistan, what is it that we expect to face over here?
So I always say, what is the cost of going cashless? Cash has zero cost. It's in your pocket. It's nothing. It doesn't cost you anything to keep cash in your pocket. I can go outside. I can just go to this guy, get a water bottle from him, and we do a transaction at like 10 rupees, 20 rupees, something. Cash is frictionless for most transactions, for most small denomination, small volume transactions. Cash is frictionless. So moving from cashless is a very, I would say, difficult task, but it's still possible. And we should all be moving towards that. But we need to ensure whatever the alternative is better than cash. Right now, I don't have any cash in my wallet as we speak. My parents hate me for this. My family hates me for this because I don't carry cash. And I haven't had any cash in my wallet since the last 2 weeks. But I'm continuing to survive. That's a different story. Point being, it's still difficult. I use my credit card. Somewhere it will work, somewhere it won't work. If I try to pay via my mobile device, sometimes the device would work, sometimes the device will not work. Even if I try to pay, I give the classic example of a coffee shop in Karachi, which started accepting QR payments. And they used to give a very good discount of, let's say, 40% on it. So you just go to the coffee shop, you scan the QR code, and you get a 40% discount. That's great. It's just good, cheap coffee. But what was happening really? Every time I would go to buy a coffee shop, it's going to send me some kind of an SMS or an OTP. Sometimes I will receive that OTP, sometimes I won't receive their OTP. I would get frustrated. I would give them my Visa card. They would tap the Visa card, and magically it would work. So this is the friction we are talking about. Even between cashless to cashless, every medium has some sort of friction. Cards, they haven't really just gotten traction in Pakistan. Maybe there's something else that can be done. So when we want to move to really cashless, we need to ensure that the payment to payment is frictionless. If I want to transfer funds to anyone in the audience, I should be able to do it within 30 seconds, because that's the time it will take me to get into my wallet, take out cash, and give it to them. If it takes more than 30 seconds, then that's a failure. I'd rather use cash. So that is the thing. That is, I think, what needs to understand. Whenever we make payment systems, whenever they are developed by those in charge, somehow they forget the user experience in the process. What the ordinary user is experiencing, whether they even paying with it or not. In many cases, we've seen if there are many discounts, users will use it. The moment discounts go away, they will just stop using it. So that discount essentially is the premium that one has to pay, and that premium needs to go to zero. Cards have largely been successful in doing this in many markets. I would say North American market, it's just cards. I mean, I haven't carried a single dollar in the last 4 years, and everything has been paid through tap. And tap has basically changed the way it's done. If you go to China, if you go to East Asia, that's just lots of mobile payments, QR codes, etc. I'll give an example, personal anecdote here. I used to go to China a lot back in the day. 2016, I was in China. I used my credit card everywhere. 2017, in maybe like 8 to 9 months, they just stopped accepting credit cards, and you only could use Alipay. And I was a tourist there. I was on a visit visa. Even I could open an Alipay account, load money into it, and then start paying within 60 seconds. So that's frictionless. If any of these kids go and try to open a bank account, it will be a pain and a half. In fact, a lot of people in the country won't even be allowed to enter a bank. That's how discriminatory banking practices are as of this point. I mean, I always give an example. If you just randomly walk into a bank branch and say, okay, you know what, I want to open an account, you will not be able to open an account. They will give you the most loser account available, which has absolutely no value whatsoever. So our policies have effectively discriminated against the people at large. We have deliberately excluded people from financial. The most hilarious bit is you go to a bank, and you got cash. You want to deposit cash. All right. You've been with that bank for the longest time. You've been account for 15 years. You want to deposit something like 400,000, 300,000, any amount of cash, not a very big amount of cash. That's justified. They will not take it. The limit is not there. That's not my problem. That's your system's problem that does not recognize I should have that much limit. So that's the thing. Banking has not evolved to essentially cater to needs of the customer. It has not evolved to ensure any kind of user experience. So, and till the time experience actually improves, it will be very, very difficult to move to a cashless economy.
Right. You're absolutely right. And to share with all of you, one important thing is although cash is free for us, cash is convenient for us, cash has a lot of cost. You might just want to take it as a task, Google it, search what is the cost of cash. There's a cost that the government bears in printing cash. There's a cost that the banks bear in the logistics, the insurance, the transportation, the cash handling, management. So there's a lot of cost that someone is bearing. But with digital, uh, the cost goes down for all the parties, even for the government, even for the banks. For you, obviously, it has to be just like cash is free. It has to be free for you as well. I have a very interesting story on the user experience. I'll come to that later on. Now, while we are discussing about the problems with cash, Hina, the State Bank of Pakistan has been instrumental in helping the people of this country in developing something where technically, we can get rid of cash, right? Raast. What is the Raast journey? Why did it happen? Uh, I get asked a lot of times by a lot of people out there, you're already doing digital payments. Why Raast? What's so different?
So it from a layman's perspective, I believe everyone would feel we already had IBFT. No one was missing anything before us. Whenever you wanted to pay to someone, you were able to do so using your respective banking apps via us. So there are a lot of underlying details to this question. The infrastructure in the country was particularly related to the payments, was very archaic. The national switch we previously had was using the rails of card payments, basically. Every other digital product was being built on the same rails. It was about time that we graduated to a format and infrastructure which could support more than payments. So that's where Raast come into play. The transactions through Raast are just one part of it. It's basically a digital platform providing a lot of innovation, data exchange, request to pay, many other technical capabilities to drive, digital innovation and build digital products. So that is how we at State Bank imagined Raast. I believe, as Ammar also mentioned, the user experience limited us to only person-to-person transfers because the merchants were not very savvy of how to use those advanced products. The banks were also not ready to build actual interfaces for all those features that we were enabling. But as the central bank, as the operator of the system, we tried our best to put, the best infrastructure in this country. This is how we envisioned RAS, and that is how we executed it. And the last mile of it, where the financial institutions, the fintechs, other people who actually interact with the customer, it's their time to build products over those rails which we have provided.
Yeah, thank you. Now, since you have already developed Rust, it's not correct to blame State Bank for the non-digitization of the economy in Pakistan. I know State Bank is putting in its effort. There's only so much that the State Bank can do. Uh, Here comes the role of the other sectors as well. Sharjeel, you work for the development sector. I just want to understand from you that although the understanding everywhere is, it is the government's job, it is the State Bank's job to digitize the economy, go cashless. What is the role of the development sector? Why is it important for someone else to just come and help support everyone?
So thank you very much for a very prudent question that what is the role of the development sector? So look, in developing economies of the world, Pakistan is not a unique case. This has happened elsewhere in the world as well. Wherever there is a development agenda, development institutes come into play. All they can do is basically help establish the infrastructure. In this very case, when we're talking about setting up of a cashless economy or digitizing the economy, we are obviously focusing on development of digital public infrastructure. Now, what is it? Raast is a very good example. Raast is a brand, but essentially I think everybody probably knows, but I'll still reiterate, it is a piece of infrastructure, a piece of sophisticated digital infrastructure that is implemented at the State Bank of Pakistan to facilitate instant payments at an absolutely low cost, which is currently zero. So in a development economy like Pakistan, where funding constraints are there, unfortunately, entities like Karandaaz, Pakistan, they come into play where we're very grateful to our actual sponsors, donors, the Gates Foundation, who have set us the mission and the agenda to increase financial inclusion in Pakistan. Setting up of DPI, digital public infrastructure, is essential for chasing that ultimate mission of increasing financial inclusion. But it does not end, by the way, just at payments rails. There's more to do, and we are looking at that as the next frontier. For example, setting up of digital identities, setting up of data exchange across Pakistan. As you said, the general perception is, from a citizen perspective, that everything needs to be done by the government, but it's not possible for a country like Pakistan, which is still in its sort of infancy to growth stage. So the development sector comes to support that. But is that going to be enough? The answer is no. With the infrastructure put in place, and again, I'll just take the example of Raast, now the onus is on the wider ecosystem. This piece of infrastructure is for public good. It has been funded by donor money. It has been put into effect. Now, the other players of the economy, private sector, financial institutes in this instance, Fintech, they need to join the party. They need to innovate on top of it. They need to cater for all the necessary use cases, daily life use cases, so that the exchange of payments becomes absolutely easy, simple, and low cost. As Ammar mentioned earlier, he's absolutely right. Why would I switch from cash to digital when I see digital as so much, carrying so much friction? I have to have internet, I need to have a phone, I need to have a digital bank account. Whereas cash is simple. I go to an ATM, I fill my pocket, I can last for a week. So the experience comes from innovation. The infrastructure will not give the experience. Innovators need to think broadly now. But to the other point of Ammar, I would definitely like to humbly disagree slightly. As a citizen, we don't realize that we are actually bearing the cost of dealing in cash, because that cost, as you mentioned, is actually inbuilt into the cost of that water bottle. Perfect example is you used to buy a lot of good stuff from shops. Now, a lot of it has moved to e-commerce spaces. Haven't you seen a general trend of declining prices? Why? Because the cost of doing business on an e-commerce platform is much lower. Similarly, once we convert a significant portion of cash to digital, the cost of cash would diminish. And where would it go? In competition, the manufacturers, the sellers would actually have to pass it on to customers like ourselves, and that's where we'll see the difference. So, in a nutshell, Development sector can only play the role of an enabler. That's what Karandaaz has been doing. We enable implementation of large pieces of digital infrastructure. We also enable private sector by funding innovation, by funding creation of new business models. We fund experiments. We even fund scaling of successful pilots. So us and other players would continue to enable the ecosystem, but eventually it will come down to the private sector to think broadly, innovate on top of these things, and create more public offerings.
Right, thank you. That perfectly makes sense. Ammar and Sharjeel, both of you did mention about the convenience of making payments digitally. Can I go to the audience? Has anyone over here not used digital payments ever? Anyone who just says, I haven't done digital payments, I am always happy with cash? Right, so 2, 3 people. What could be the reason? Why is it that most of you have used digital payments? I just want any one of you to answer, what convenience do you see in digital payments? Is it just a thing that you are probably carrying a card or making payments digitally? It's something modern in the society, or what is the reason for that? Okay, so for people who are doing digital payments, why do you do digital payments? Anyone? Yeah, there's someone here.
इन पाकिस्तान चोरियाँ बहुत होती है जैसे कि आपको पता है, तो कैश ले जाने में थोड़ा डर लगता है कि अल्लाह ना करे मेरे पास 10,000 रुपये और किसी ने 10,000 रुपये चोरी कर लिए, कार्ड पे पासवर्ड होता है, नहीं चोरी कर सकता. ये एक पाकिस्तानी रीज़न है. हाँ, सेंस ऑफ सिक्योरिटी बेसिकली.
So one reason is security, because cash could be stolen, and with digital, you think you are secure. It's with you. Okay, can I play the devil's advocate here? Carol, security, frauds on digital payments.
Well, it is a concern for all of us, and fraud, I think, is a particular concern looking forward. I mean, with AI coming along, a lot of people are concerned about what can happen with AI-driven fraud. And so financial institutions in particular are making sure that they have systems in place to control fraud. And it's going to be very interesting to watch over the coming years how that evolves. But whether or not those risks will be greater or less than the risk of having cash stolen, I don't know. But I did want to make another point, though, about the convenience and the user experience and other things. I've been here on this trip for a little over a week, and I've been meeting with a lot of banks and Fintechs and other people, and I've heard a lot of comments along the lines of people being frustrated that Pakistan is behind other parts of the world in the development of certain parts of the economy. And although I recognize that as being true, there is a piece of advantage there, in that there are lessons to be learned by looking at what other countries have done. And so when you look at the example you gave of the user experience, and you don't have to learn, you don't have to invent it all ourselves, We can look at what India did with UPI. We can look at what Brazil did with their PIX system. There are really, really good examples of how people have solved the user experience. I'm not saying it's going to be easy. We've got some real barriers that we're going to need to solve, but we don't have to invent it from scratch. And this is true of almost all of the problems we face with the payment systems. So there's a lot of benefit there. We can have a shorter cycle in solving our problems than some of the other countries have in implementing the payment system.
Right. So yes, I agree. User experience is one problem that we really need to improve on. It's probably going to help them a lot. One of the barriers to people who still use cash is convenient. It's simple. I often give this example. You go to a shop and you need to buy a packet of chips, let's say. It's 50 rupees. It costs you 50 rupees. You just take 50 rupees out of the pocket, put it there, pick up the pack of chips and walk away. How much time do you think it takes? So for digital, the convenience has to be at a level where you at least match that time. The day you match that time, you'll see how everyone starts adopting to the digital payments. One interesting thing, because people normally, whenever I talk to people around, they all bring it back to literacy, that because of low literacy, the adoption will be lower. To some extent, it could be right. But in the areas where people are relatively less literate, they know how to use social media. In fact, the usage of social media is very heavy in those areas. So people learn, people can adapt. Uh, that's something we need to focus on. But speaking of this, we just mentioned cash is free for the consumer. It costs something to the government and to the financial institutions, which are the banks and whoever is processing the payments. Payment processors and the banks have other kind of costs as well. And for digital, because those third parties and even the fintechs, they've come here and they want to give you service. And we expect the service to be free to you. Does this mean that the fintechs cannot earn money? Because the cards normally, they charge a certain percentage from the merchant where you make the payment. It's called the merchant discount rate, MDR. With the digital payments, QR payments, we believe it's something for the public good, just like the example Carol gave about the checking system. It has to be there for every citizen of a country. Then how do these fintechs make money? Because they are here to earn money. What could be the alternate source of revenues?
Well, in the economies that I'm familiar with, most of the fintechs are making their money not on transaction fees relative to the payment services they're providing, but on adjacent services that they are selling to their markets. And they may be risk management services, they may be lending services. In the e-commerce world, I know the U.S. market particularly, in the growth of the U.S. market, the payment service providers in that market became highly vertically specialized. And you had different providers for almost every vertical. And they had, detailed services that were, it might be somebody was a provider of, a certain kind of store and they sold inventory management services for that store or something else. And they were very good at that. And they had generic payment services processing for that they did have transaction fees on, but that was not the source of their revenues or profits.
Yeah, so maybe I can also add to that. So it has to be adjacent avenues for making money for fintech and even financial institutes. I'll give you the example of India. I'm sure a lot of people here have read about it. So currently, approximately 55% of the Indian economy is being run through digital money, right? So that is a huge chunk of economy that's gone on to that. Now, what has that led to? It has led to a very strong footprint, digital footprint of individuals and businesses. Imagine every coffee shop, every non-shop in Pakistani context, restaurant, hotels, fuel stations, wherever you're transacting as a consumer, you're leaving your footprint, and also the business is getting a very valid, non-challengeable sort of footprint of their business activity. That piece of data opens up a clear-cut avenue of financing, whether it's cash flow, whether it's short-term lending, long-term lending. As a result, in India, the SME sector, and particularly the SE and even the micro combined, the entire, and I think Ammar can also confirm that if I'm a bit off, but my numbers from recent research suggest around 35% of the entire lending ecosystem is going towards SEs and micro businesses. Now, that is a key indicator for a growing economy. So if 35% of lending is going towards that, of course, these businesses are making money on that lending component. And that's where the fintechs share with the actual institutes that offering their books. One more interesting fact, with that kind of growth in the lending space, the cost of lending for these small businesses has actually dropped from 20% to approximately 10% right now. So the market has become so competitive for the lenders that they have reduced the cost, but they have such a big volume to play with just because every transaction in that 55% chunk has a full context of information associated to it. Who is paying, but what are they paying, and who is getting paid? Imagine the power of that data.
But, I have a related point to make on this for you economists in the audience, and this is a little involved, so bear with me. But I do believe that the card payment system has sort of distorted bankers' thinking about payments, particularly the debit card market. Because the card payment system is an expensive processing system, it has an involved back and forth processing model. It has relied on having point of sale machines. It has built-in rules about refunds and things like that. And it has, as some of you may know, an involved interchange model. It has inherited from the credit card system a fee structure that banks have come to rely on, and they've come to think that, of course, a transaction model, should have fees on each transaction, partly to compensate for these costs and partly to give them revenue. But these instant payment systems like Raast are really more like email. They really aren't like the credit card systems at all. A transaction simply comes into the bank, like an email would come into your, it's just like, boom, it just comes in. It is not expensive. It is not involved. And there's really no more reason to think that the bank needs to charge for this to cover their expenses than than Google would charge for sending you an email. And so from a cost point of view, there isn't any logic behind the need to charge for it. And of course, a bank would want to have transaction revenue. I don't dispute that, but there isn't a lot of logic behind it. So I want to go back to the world of checks. I'm old. I remember when checks were the way banks did business. And when we had checking accounts, we didn't charge for these. It was part of the overall account bundle. We made money by the value of the balances in the accounts, and sometimes our customers would borrow money from us. And that was sort of the way we made money, generally speaking, more complicated than that. But we didn't think of checking as a stream of transaction revenue. Okay, and so I believe we're really kind of going back to that world. And systems like Raast, which are operated as public goods, very, very low cost transaction systems like email, are fundamentally different than the card systems. It's going to take banks a while to get adjusted to this because they're used to thinking of payment systems as a source of revenue. But it doesn't make sense that they're a significant source of revenue. And they need to kind of go back to a world where they're going to make money off of the balances. And I was in the offices of one of your major banks the other day, and I asked the chief operating officer, I said, you know, do your customers who do a lot of electronic transactions, are their balances higher on average than customers who don't do a lot of electronic balances? He was kind of reluctant to say, but he smiled and he said, yes, they are higher. And that's basic banking. An active customer is going to have more balances than a customer who is not active. So these kinds of payment systems will bring customers into the bank. They'll have more balances, and some of them will borrow money. That's banking.
So most of the Generation Z, is adapting to the payments digitally. That I am sure of. My children want me to make payments digitally whenever I want to take out cash. They say, no, let's pay using your mobile. So, yes. Now, a question on basically the impact of digitizing the economy. Let's say, going cashless. I remember the ATM network in Pakistan started around early 2000s. We had two networks, Mnet and OneLink, and then they both just combined, and we now have OneLink for the ATM payments. In 2008, the branchless banking regulations came in. 2009, Easy Paisa started, and that's the reason everyone, even today, says, let's Easy Paisa the money to someone. And then the Jazz Cash came in, and then there were a few other players. So the age of digital banking started happening. Do you think an impact has been created because of that? And in terms of GDP or general quality of life of people, what's the impact of starting to get into this digital age?
I think much more can be done. We had a really nice head start with EasyPass and Jazz Cash in early 2010s. And then we suddenly lost that traction in the middle. And there has barely been any innovation since then. I'm even going to put my limb out there and say that there's barely been any innovation because you're doing the same things that you were doing earlier. If I have a Jazz Cash wallet, I'm not keeping any money in it. I'm just using it for quick transactions. So these became just transaction medium rather than something where you put your money in. And that's why the institutions could not essentially make money in the process. And it's not economically feasible as of this point. I'm just going to step back a bit and take a more macro view of things. In Pakistan, currency in circulation, that's literally cash, makes up about 27% of the total money supply. That's a very, very high number. This essentially means that there is about roughly 9 trillion rupees of cash, which is basically sloshing around here and there, and there is no record of that. You don't know what is being purchased with that. You don't know where it's stuck. So it's just moving around. And what's happening there? Because it's just cash in the economy, it's not really savings. It's not in the system. So from a pure macro perspective, if some saving happens, let's say someone puts money in a bank, that money is lent out. and there is some economic activity, some industrial activity. What's happening is with cash, there is barely any industrial activity you can do. What can you do with cash? You can buy chips, you can consume with cash, you cannot invest with cash. What you can invest with cash? You can buy gold with cash, which is completely useless and non-productive asset. You can buy land with cash. Once again, another non-productive asset. You're not generating any economic value. You are generating some economic value, but let's say you're not generating any new production. We're not producing anything. We're not exporting anything. So the high prevalence of cash in the economy essentially has stunted our growth over the last many years. So what's happening here? Let's say there's cash in the economy. Someone has about like 10 million rupees. What's going to happen? He goes to a bank, says, okay, you know what? I want to put 10 million rupees. I don't know, man. How can I take 10 million rupees? What do I know? So that person is a criminal first before a citizen. So if you go to a bank, you're a criminal first till the time you can prove yourself otherwise. That's completely opposite of what a typical court of law would do, where you're innocent until proven guilty. In this case, you're guilty until proven innocent. So we flipped the whole script here. So people don't trust banks. Individuals don't trust banks. Businesses don't trust banks. One metric that I always focus on is the ratio of private sector business deposits and government deposits. So the expectation, the sovereign, the government would always deal in formal banking channels. But private businesses are free. So the ratio between private businesses deposit and government deposits has actually been declining, which basically means government deposits are increasing, but private deposits are not. So what's happening here? Private businesses are transacting more and more in cash. And that's why when we always say, okay, what is the number of SMEs in Pakistan? It barely grows because a lot of businesses, they're just individuals running businesses on cash. So this affects overall growth of your economy. When you do not invest in your economy, what happens? The aggregate supply in the economy doesn't move. When the aggregate supply does not move, but there is more cash in the economy, your aggregate demand will move. When your demand increases, you have to support that somehow, that consumption somehow. So you import more. When you import more, what happens? Your rupee depreciates, the currency depreciates, the dollar gets more expensive, and you get this cycle of inflation. So more cash in the economy eventually leads to more inflation, and we keep on fueling that again and again. So going cashless, a very, very critical component of going cashless is essentially you can contain inflation in the process. You can contain inflation. We have significant growth in inflation because we throw money at the problem. We print a lot of money. That money actually results in cash, and then it just basically just finds a way wherever it can. We see a lot of commodity price increases. What happens? You got 10 million rupees. The bank says, I cannot take the 10 million. What do you do with 10 million? So you can either go and buy a piece of land, or you'll go to someone and say, okay, you know what? How about you give me this 100,000 tons of wheat? I'm just going to buy this wheat and hoard it, because you can buy wheat with cash. So you just put your wheat in a warehouse, you put sugar in a warehouse, you put any commodity in a warehouse, and suddenly you see your commodity prices increasing because hoarding solely and totally happens in cash. If there was no cash in the system and you had to do a receipt, you had to do a transaction, there would be more flow of money and goods in the system, and inflation would generally subside.
What do you mean that businesses don't trust banks?
So I used to work with an entity. I used to be the CEO of Fintech earlier, which used to solely work with SMEs, mostly on the micro and the small side. If they go to a bank, now they say in a typical SME in Pakistan or anywhere in the emerging markets, you cannot separate the SME from the sponsor. It's more, the individual and the business is the same thing. So that individual goes to a bank. He says, I want to open a bank account. They won't open his bank account. They won't open his business account. He will have an individual account, and that too with a certain limit. They won't open his business account. When they don't open his business, and they will ask him tons of documents. And the guy doesn't have those documents. And the guy is just selling chips and soft drinks, or like, I don't know, just like fixing cars. He doesn't have those documents. You have, again, this is where the user experience comes into play. Everywhere you go, so they will say, okay, you know what, I don't know what they're going to do with document, because there is this lack of trust in the system. Again, I have seen businesses wanting to open accounts. You go to a bank, a typical response would be they don't want to open accounts. They want to open account, but when they walk into a branch, they're not treated as a customer. They're treated as, oh my God, I have to deal with this guy now. Because a small business deposit will not be a big deposit. So why will a bank bother with that?
So it's partly trust and partly just not liking the banks. I mean, they're just being awful to them.
Exactly. So because the user experience is so bad, why will you bother going to a bank?
Okay.
I mean, I'm scared of going to a bank. I've worked in them all my life, but I do not want to enter a branch. But God damn it, they might just some ask me. Or,
So this is calls for MSPs in the market to step up and solve this problem. Yeah.
Yep. I think, again, now Ammar has gone on the other side of the spectrum of the problem. First, we talked about lack of user experience from making the payment. The rails are there, the solutions are there, but if the solution is not good enough, simple enough, low cost, don't expect adoption. Now, on the other side is to start using all this infrastructure, you have to be banked. Whether you're an individual or you are a business merchant, the onboarding process, the onboarding in terms of getting into the banking system, opening of a bank account is, of course, another barrier. And if people are not finding it easy to become banked, especially the merchant space, they're not going to use it, obviously. So absolutely valid point, I think. And this is where, again, more innovation, entities like MSPs, Carol just mentioned, for different segments.
Yeah, I mean, what we're seeing around the world is where if banks can't step up to provide services, whether it's to consumers or to merchants, you push them into the back end and you enable merchant service providers or payment service providers to do the front end of dealing with the consumers or the merchants, and then they contract with the banks in the back end. The banks are not going to like this. So the regulators need to force banks into the roles of being the back end enablers. But that's the way it's done. There's examples in economies around the world. You know, the banks end up in the back end. They get a little bit of money for doing this. They don't like it. But if they're not willing to provide the services that the market needs, that's the way it has to happen.
So there is a recourse mechanism, which I believe by regulations the merchants have to follow. So, for example, I bought something from you, you were a merchant, and I'm not happy with the product or you didn't deliver on time, then I can always call my bank and say, I didn't got the product, can you please reverse my transaction? So if the bank has that, undertaking or other documentation signed by the merchant, it's easier for them to recover the loss of that customer. However, if it's an individual account, if there was no undertaking, then you cannot contest that particular transaction. The customer is at loss. So that is also a perspective from the banks and the account holding FI's perspective, which we do understand. By the way, we issued a digital merchant onboarding regulations by which we mandated the banks to provide interfaces where merchants could go and open their merchant accounts digitally. I know it has problems. It provides a very little limit. It's about 5 lakhs. It's 0.5 million as of now. But it does provide the baseline. Any person can get themselves registered, get a hang of thing, and then get them, graduated to the next complete merchant level. So yes, we are working in all of those prongs, and we've kickstarted things, and with the help of experts like all of us together here, we would keep building things. But there's only so much, I believe, a central bank can push and mandate. A lot of would be required from the financial institutions, from the industry itself, from young innovators as well. So yeah, that's how we plan to take it forward from here.
Yeah, I guess maybe I'm a little bit skeptical. I mean, as a banker, but I think that if you look industry-wide, you have to sort of say, are banks going to step up to the plate to enable what needs to be done in the market to move to a cashless economy? And if they're not willing to do it, then you look at the model of what India has done and what some other countries have done, and you have to move aggressively to enable the PISP and the MSP models. And the banks aren't going to like it, but that's the only way to get there, in my opinion.
So we do have this model available in Raast. When there are no banks, then we encourage the aggregators to come forward. We aggregated a lot of asset management companies. A lot of asset management companies were aggregated by the Central Depository Company of Pakistan. We even, partnered with OneLink. We did not take OneLink as our competition as a parallel stretch in Pakistan. We onboarded them on Raast and we leveraged on whatever billers they were duplicating. We offered them the RTT rails, the more modern rails for processing bill payments. So this is how we plan to move forward. For the MSPs, we have also started onboarding institutions which are licensed by State Bank of Pakistan but do not hold customers attached. So we onboard them. They bring the merchants to us. They do the verification and KYC of those merchants, which is by regulation. This is mandatory for the merchants to do and the financial institutions to carry. So, but they do the hand holding part, which as Ammar mentioned, the banks don't want to deal get happen. So those MSP deal with those people and help them to bring those documentations, get those documentation which they do not have, spread them on behalf of the bank. So yes, we have started working in that direction as well. We have stay fast onboarded with us and company this direction.
So, what I hear is that there's a gap that the banks are leaving out in the overall society for digital payments, and whenever there's a gap, someone has to fill it out, and probably the fintechs, the merchant service provider, third parties, maybe entities which will be started by the likes of you in future. Those are the companies which are going to fill this gap, because there's a huge market of about 10 million retailers, businessmen, merchant out there. We only have about 4 to 500,000 people who are using digital means as their merchant accounts. So there's a huge gap, and maybe you can go and fill that in. Okay, so that's the basic discussion from our side. I am also wary of time, so if there are any questions from the audience. Very good talk. Thoroughly enjoyed it. I have a question that we see small businesses using digital payments more and more now. Easy Paisa, Sada Pay, Jazz Cash, even our commerce canteen beside IBA has that opportunity for us to pay digitally. What I want to know is, right now, these payments are limited to debit transactions, like my cash goes out my bank and to them. I am more of a person who likes to use credit cards. I want to do these transactions through credit. Is it possible? And if it is possible, what challenges do we face in making Raast enable to do credit payments?
Credit card payments are what payment systems geeks call pull payments. And they are, and Raast is a push payment system. It's meant to be straight. This is back to the email analogy. It's a push of a payment straight from your bank account into the merchant's payment system, and that's what makes it into the merchant's payment account. That's what makes it a very low-cost payment. A credit card payment, almost by definition, is not a low-cost payment. So, indeed, most people who have a little bit more money have access to credit cards. Sure, they prefer using credit cards. They can get points, et cetera. And those payments will continue to exist and be used by people who have access to them, side by side with the low-cost payment systems, and not be incorporated into them.
So, if we understood the question correctly, was it that you wanted to use your credit card at these locations, or was it just like a credit card, you wanted to use your account to work with credit? Hina, is it possible using Raast?
Like Carol mentioned, there's a fundamental difference in these two transactions. One is pull. In fact, it's a different product altogether. You're creating effectively a credit line from the bank when you get a credit card from your bank, right? But Raast, it's a push payment system where the transfers are between two accounts. The accounts could be of any nature. The account could be a government and a person and a government, business and a business, a person and a business, any kinds of accounts. But to use, a push payment, the principle is that one account has to get debited and the other gets credited, and it's irrevocable, it's final. There's no post settlement to that. So fundamentally, two different type of products. So yeah, in near future, I don't see credit transactions happening through Raast, but in order to facilitate getting better credit lines, I think the data which Raast transactions carry would be very helpful for all type of financial institutions. Because when I asked, when I told you earlier that we have changed the infrastructure, underlying infrastructure behind the payments, we now carry a lot of context to your payments. On basis of that context, many financial institutions could do a lot to give you good credit products as well. So yeah, that I can see in the future, not the credit card thing.
Maybe for the clarification of the audience, one point. Carol, you are the architect of these rules. What's the difference between a push payment and pull payment? So we understand, but when there were pull payments available, why did the experts like you decided to build something which is push only?
Okay. So a pull payment starts when the receiver of funds, so a merchant, starts the payment transaction by asking the payer of funds for the money. So the transaction starts when the merchant sends a transaction through the network to the consumer's bank or credit card provider and asks the question, may I have the money? Is this a good transaction? And then presumably the answer is yes. That's what's called in the card system an authorization transaction. And, later there's a second message that comes through and settles the transaction and gives the merchant the transaction. That's why this is a more complicated and risky transaction. There's two different messages. Things can go wrong. It can, the answer can be no. There can be timing differences and such not. That's a pull transaction. A push transaction starts with the person who has the money, the consumer, who says, I'm going to send you the money. Boom. And it goes from the account of the person who has the money to the person who is getting the money. Again, the email analogy. So there's no need to authorize it. There's no need for a second transaction to confirm it or settle it. It just goes straight through. I used to tell my friends who were technologists not in financial services when they'd ask me, what's so special about a level 1 payment systems? And I would say, well, it's a payment system that looks like what you would design if you took a blank piece of paper and designed what a payment system should look like. You start with, I have money and I'm going to send it to somebody who needs money, just straight through. And it is inherently less risky, less complicated, and lower cost. Right. It was, just one other point. Back when the credit card system started 50 years ago, it wasn't possible because things were not online. Okay, that's why pull payments started the way they did. Checking systems are pull payment systems. You write a check, it's an authorization for the receiver of the check to go to your bank and ask for the money. All right, that's a pull payment system. But in today's electronic world, there's no need to have those kinds of systems. You can just send them through.
My name is Shakib and I am a BBS sophomore. I had a question that in Pakistan, most people, most merchants don't have bank accounts because they want to avoid taxation. And I believe that in the path of developing a cashless economy, they might be your biggest obstacles. So what would be your strategy to convince them to come on board?
This is our favorite question. We get a lot of this question.
In my experience, they don't want to evade tax. They want to be part of the system, but they're not allowed to be part of the system. Again, it's the whole point of, if you have a small restaurant and you do, let's say, 200 to 3,000 rupees of sales daily, and will still not open your bank account, and your individual bank account does not have that limit, so you're stuck there. So they want to pay tax. See, taxation, again, death and taxes, these are the two certainties in life. And you will pay tax because they know if they improve, if they increase their, let's say, throughput or sales, automatically their profits increase as well. I mean, this is what we've studied time and again. And through better digital payment mediums, you can increase your sales. So they want to increase it, but the friction that exists in the system, that just discourages them from them. Again, we used to work with a fintech with about more than 1 million businesses, and used to work with a lot of them, lend to maybe like 20,000 of them at one point, and barely anyone said that we won't open our account because of taxes. The only reason was, man, how do I open an account? How do I open an account? Because I go there and won't open an account. It'll take 3 weeks. I cannot go to the bank every 3 or 4 days to check because I've got a business to run as well. So this is the friction that's the problem. Tax is not the problem.
I'll just add a point to that. So absolutely spot on, Ammar. But yes, one aspect of your question is absolutely correct. The tax system of our country is not equitable. We see that as consumers. I mean, there are a lot of, I originally belong from Lahore, so I'll quote a phone market, which is called Hafiz Center. Some of you might have heard about it. If I buy a phone from Hafiz Center, exactly the same phone, and I go to buy it from an official store like Metro or Carrefour, something like that, the prices are different because of the tax factor. So the merchants are avoiding the tax system because of the poor experience. That is one big thing. The segment out of that, which is just avoiding tax because they don't want to pay it, that's a habitual thing. I would say that's a social sort of a thing that we can't really fix instantly, but we can show them the value in the longer run, which Ammar alluded to, that if they come onto digital, if they become documented, the growth of their business can actually offset the potential burden that they have perceived. But that's a journey. So the habitual people have a longer journey ahead, but those who are not getting into it just because it's too inconvenient, opening a formal bank account is inconvenient, using it is inconvenient, that's a different sort of a problem.
So my question is that as we are discussing about a cashless economy, so like I've been to countries where they're so easy to do cashless payments, for example, Apple Pay, and I've heard even in China there's only use of a thumbprint and it can make the payment easily. So don't you think that in Pakistan we are so far behind in terms of this, and it is much of an issue to dial your ATM pin and everything, and then the payment is done. So we moving towards the cashless economy, I feel that this is very important that we make ease for the people, for the consumers, and to make it better for their experience. So what do you think that in future years will this be possible?
Absolutely. You've made a very good point there. And I'll go back to what I said earlier. With introduction of Raast as one piece of DPI, the foundation is fully laid. The capability to support that experience is already there as we speak. Now it's up to the level of innovation, where we want to take it, whether we want to grow through NFC payments or, the experience part has to be sorted by the innovation. We're lucky at this stage that the infrastructure that can actually enable it is already there. So I don't see it too far ahead. There are a lot of fintech that are up and coming. From Karandaaz's perspective, we are actively looking to support all such innovation. State Bank is very, very open and forward-looking in terms of opening up policies and avenues for such entrants to actually take advantage of Raast. So yes, this is around the corner. But you've made a very good point. The convenience of making a digital payment has to be there for it to be used. more.
Just one more point on the user experience. Some of the frictions are somewhat deliberate, to make the payments inclusive. Why every transaction has OTP when we already have device binding, right? It's a very common questions we get asked all the time. It is because not every cell phone which is using the banking app is biometric enabled, or the person is savvy enough to device bind it correctly. So that is why the OTP has been mandated across the board, because we need to see the market. We need to keep the trade-off between fraudulent transactions. Not exactly fraudulent transaction, I would call it social engineering, because we have a very high percentage of our population which is very much vulnerable to social engineering attacks, right? So if someone is willingly giving their credentials to someone on the phone which is promising them Umrah tickets or something like that, they give it to them, they do the transactions, and then it's done. Then the trust which was built in over the years is just lost. So that is why there are some frictions which are kept there deliberately until we, see a stage where we see the customer is, savvy enough. There are number of enough device minded users. So, when there's device binding, you just do biometric and then the app is all set. Then the OTP is not required, right? So, yeah, this is also the part of the point. I know there are limitations of the user experience which Raast or any other payment platform in Pakistan has. But sometimes they're there to, as a trade-off to prevent the customers, to prevent unforeseen, incidents happening.
सो माय क्वेश्चन इज़ दैट कि हम लोग जो है जो जब भी कोई चीज़ डिज़ाइन करते तो हमारी पॉलिसी मेकर्स ये क्यों ध्यान में नहीं रखते कि जो बेस है उसे पहले सेट करें. फॉर जस्ट फेक एग्जांपल, इन कराची फॉर एग्जांपल पीपल्स बस सर्विस है. अब रोड्स है नहीं प्रॉपर, आपने बस जो है रोड्स पे उतार दी. फॉर सिमिलरली लाइक दैट आई जस्ट एग्री विद मिस्टर अम्मार कि हमारे पास जो रास सिस्टम है या इस तरह जो डेवलप हो रहे हैं सिस्टम, उसमें ये क्यों नहीं हो रहा कि हम लोग बेस को पहले सेट करें. बैंकिंग सेक्टर, ये जो प्रॉब्लम्स हैं पहले हम उनको सॉल्व करें, उसके बाद हम नया सिस्टम डिज़ाइन करें. एंड माई लास्ट क्वेश्चन कि रास सिस्टम में और जो हमारे बैंकिंग के दूसरे ऐप्स थे उनमें डिफरेंस क्या है. लाइक जो हमारे बैंक्स थे रास से पहले वो भी तो सेम सर्विसेज प्रोवाइड कर रहे थे, तो रास में एक यूनिकनेस क्या है.
So first, आपका जो question है कि baseline, why not a baseline first and then move forward from it, right? When we were designing Raast back in, I believe, 2015, what we had in mind was a journey from G2P to P2P to P2M. We executed it in the same way, right? Why G2P? Because the government would pay salaries to people. This would add money into people's accounts, right? And then P2P, so people would start spending that money in the usual transfers which we already do. Okay? But at this point, your second question. We were, sending money to each other before Raast as well. How were they doing so? Using two mediums. Either to someone which has the same banking account as their own bank, okay, which we call honest transaction, right? And the other mode of transaction was they were doing this transaction using OneLink, which is a very important part of the digital payment infrastructure in Pakistan, but it is built on all the card rails, an old data format, an older infrastructure, right? So there comes the infrastructure part. That infrastructure needed a major upgrade. We did that, right? So this is the difference between the older system and the new system Raast. The underlying architecture, in terms of hardware, in terms of technical specifications, the data which flows with the transaction, it's completely different from what it used to be earlier, and which is there in Raast, right? So this is the difference. And now the next step is P2M. Now government is paying salaries into people's account. There is some money in people's account. People are now used to of doing free transfer to each other. Now we are trying to bring the merchants included as well. And we know there are hindrances, there are problems, there are issues. And we are trying to obviously solve it. So for that, the last mile is also covered. But see, the last mile is very complicated. And when things are that complicated, it needs a lot of patience and strategy to, solve those things. So it would take time. But I think, I believe Faisal Saab and Carol would also agree that we are taking all the steps. Whether they are the right steps or not, I think the time would tell.
आपने जो एग्जांपल दिया वो बिल्कुल वैलिड है. अगर सड़क नहीं है तो बस डालने की ज़रूरत नहीं है. बट हियर आई कैन शो यू एंड जस्ट थिंक अबाउट इट. यहाँ पे चीज़ें एक्चुअली ऑर्डर में हैं. आप थोड़ी सी एवोल्यूशन देखें पाकिस्तान के अंदर भी, ग्लोबली भी ऐसे. वी आर वेरी मच बिहाइंड रेस्ट ऑफ द वर्ल्ड एज द other member said earlier, some banks being behind is also a blessing because you can see at success stories that other countries or nations have followed, and you just have to, replicate it. So it's not always harmful. आपका जो पॉइंट है ना कि यहाँ पे ऑर्डर में चीज़ नहीं हो रही, इधर ऑर्डर में हो रही है. आज से 10 साल पहले सिर्फ बैंकिंग जो है वो ब्रांच से ही होती थी. फिर बैंक्स ने अपनी वेबसाइट्स बनाना शुरू की, मोबाइल ऐप बनाना शुरू की, इलेक्ट्रॉनिक ट्रांसफ़र शुरू हो गए. सो ये एवोल्यूशन का एक नेक्स्ट स्टेप था. बीच में आपके क्रेडिट कार्ड्स भी आ गए, आपके कार्ड्स भी आ गए, डेबिट कार्ड्स भी आ गए. सो ये सारी चीज़ें गुजरने के बाद ही हम इंस्टेंट पेमेंट सिस्टम की तरफ आए हैं. सो इट इज़ द राइट टाइम. अगेन वी आर लेट ऑन दिस, बट इन आवर जर्नी this is the right component. Now that it's deployed, that has opened up the avenues of further innovation. Now, whichever financial institute or fintech makes the first move in solving other barriers such as experience, such as onboarding experience, value-added services, they will, of course, make a good business out of it, and the rest of the ecosystem should follow. Thank you.
Just one update. So, जो roads और buses की example है, Raast is a road network. We call it the rails and roads. Basic infrastructure है, enabling payments State Bank ने enable कर दी है. Now it is up to you. आप लोग innovative ideas लेके आए, you use it. It's just like कराची हैदराबाद आपको हाईवे मिल गया है. आपने ऊपर क्या चलाना है वो आपका डिसीजन है. फैसिलिटेट कैसे करना है, हाउ यू वांट टू मेक मनी ऑन दैट, दैट्स योर डिसीजन एंड यू हैव टू डू दैट. गवर्नमेंट ने जो करना है वो उन्होंने आपको एक रोड बना के दी है.
Okay, so I understand that the initial infrastructure has been set by Rust, but what I want to understand is that why do we not see more awareness on a federal level for merchants in particular to onboard as digital payment acceptors in Pakistan? Why don't we see this on digital media or our mainstream media?
Got it. We'll have the other question as well and we'll answer them together because we are short of time.
Assalamu alaikum. I wanted to ask, earlier in the session, a concept such as cost of cash was discussed. So I really want to know, what was this cost? Was it in terms of opportunity cost or something else? That's it.
I'll answer your question then to your question. It's not opportunity cost. Opportunity cost obviously is there because digital, there are multiple models you can build on digital payments, right? That's the opportunity cost you're talking about. But there's a physical cost as well. Just like I said, logistics, insurance, handling, you need a bigger branch to serve more customers. And you need more staff for that. You need more electricity. State Bank needs to print more money. In a State Bank's own report back in 2022, it said State Bank has spent 130 billion rupees just on printing of cash in the last 10 years. This is 2 years ago. So that paper money that you see, it's not normal paper. The ink is not normal. It's really expensive to print it and operate the entire printing procedure. So that's the cost I was referring to. On your question about the awareness, yes, this is very important. Economies like Brazil, because the literacy rate is over, I think 75 or 76%, so people understand what things are, and that's the reason they're adopting very quickly. Let's look at our neighbors, India. What did India do? One thing that the government did over there was they put the largest chunk of the target for payments was given to the education ministry, the education institutions, universities. Karandaaz, Sharjeel can speak about it. There's something, Karandaaz, we have piloted it in the province of GB, and we have also done it for Islamabad. Now we are going to do it for the Punjab board, and obviously we'll increase. I'll let Sharjeel speak about that.
So I'll quickly make 2 points. So just adding to the cost, there's a shoe at the cost, which none of us realizes in terms of handling cash. Imagine a cash on delivery order that we all place very regularly. First of all, we have to make cash available at our homes, in our pockets, which means at some stage we went to the ATM, we drew the money out and we brought it, right? There's a cost. You might have done it with some grocery shopping, but you still have to factor the cost. And then the person who collects that COD, the TCS or the Postex or the Leopards, they have to carry it, submit it, get it eventually deposited into the accounts of the merchants who have provided the goods. Along the way, there are losses. So there's many components to the cost. Opportunity cost, of course. No footprint, no financing, no growth. Cash in circulation, 10 trillion cannot be leveraged. If even 25% of it is in the banks, that can be leveraged 3 times, which is getting redeployed into the economy. So a huge opportunity cost. Awareness is a must. Now, you go in phases. We have just completed the implementation of Raast. It was a massive undertaking, and we are very grateful to, again, our sponsors, the guidance we got from the industry, and Almighty, of course, above everything, that we have completed it. Now, our focus from Karandaaz perspective is to drive adoption. And in the adoption episode or stage, awareness, creating awareness is very important. We are reaching out. We are using socials moving forward. You might have already seen some campaigns run about the fraud that we've already launched. Soon there will be more campaigns coming through which introduce people to what Raast is, how best they can use it, and what do they need. But yes, it's something which has been missing, but we are building up on the momentum now.
The last point, I would really want you as the ambassadors for the awareness of cashless ecosystem. We have an arrangement with the social media players, TikTok and all those. So I would really want you to explain in short videos to people around you. And we'll also help you push that across the country on the social media. So you guys have to do that awareness. Thank you very much. It was, I once again would like to thank Carol Coye Benson. She has flown all the way from US just to meet us, just to speak to us and guide us on what next steps should we take. Also wanted to thank Hina. She has pulled some time out from state time because, and I can vouch for it. I've seen them working. This team works 24/7, irrespective of weekends. Whenever I call her for any issue related to the payment system, she's always there to answer, and she gets it checked instantly and gets back. So thank you, Hina. Thank you, Ammar. And thank you, Sharjeel. I would like to invite Dr. Hilal on the stage if he could come for the closing remarks. Thank you very much.
Thank you very much. I'm very thankful to my students that they come for this talk. And as we know that we want to introduce more and more innovative courses for our finance-related degrees. So whatever interest that you do have, we have the collaboration with Karandaaz as well, so that they are going to develop some courses on digital payments, and hopefully we will start with that course in coming semester as well. Again, thanks for your coming, and if you want to contact us or to Karandaaz for digital payment, you are always the most welcome. Thank you very much. Thank you for coming.